This is Rod Kusin and Spooman for Risk. The subject matter of today's video is the Baltic Dry Index. Recently we put out a single compelling reason to be concerned about the stock market and an imminent stock market crash. For reasons disclosed on that video pertaining primarily to the VIX, we indicated that the future of the VIX was a dramatic move up due to gaps. Today's video will focus now on the Baltic Dry Index. Many of you have never even heard of it. If you haven't, we recommend you go Google the Baltic Dry Index, BDI, and do some research. We're plotting the BDI against the S&P 500 on this chart, a 5-year period. Now, what the Baltic Dry Index is an index that measures the demand for shipping capacity versus the supply of dry bulk carriers. So it's basically a supply and demand index. It is very useful because it serves as an efficient economic indicator of future economic growth and production. It is therefore a leading economic indicator because it predicts future economic activity. Now, that having been said, notice the correlation between the BDI and the S&P. If we go back, and by the way, you may want to pay attention to these numbers right in here as we go through this. Now, the BDI had reached a high in here around the early part of December 2004 and began to fall. By the same token, the S&P really hadn't moved much. It had a high here of 1213 and a high here of 1243 at the time that the BDI had dropped off considerably and started to move up. At that point in time, the S&P, again around 1240, dropped to around 1180, roughly speaking. The BDI once again dropped down and began to move up. There wasn't much of a reaction then in the latter part of January 2006. But then the BDI moved up briefly and again began to drop off into May of 2006 before it turned. At that point, again, keep in mind this is a leading indicator. The S&P was up around 1320, dropped down to around 1230 as well. Okay? It's a pretty good sized move. Now, the BDI continued to move up from that point forward. And finally, we move here into October of 2007, and the BDI begins to drop off. And it dropped off dramatically, and as it did, so did the S&P. It moved up, and so did the S&P. And then it began to move down, and down she went. Okay? Now, as the BDI continued to move down, the SPOOs moved down, the S&P 500, and as the BDI finally moved up and the SPOOs continued to move down, what did it serve as? A leading economic indicator. So from roughly December into March, the BDI was moving up. Little wonder, as a leading economic indicator, when the S&P 500 finally hit its low, at least for the time, the S&P 500 turned and started to rally back, and we have been seeing a rally ever since. But notice now what is happening to the BDI and has been happening ever since June of this year. Since June of this year, the BDI has been going down. It's a leading economic indicator. Friends, what does that tell you? What's the conclusion? The BDI is going down. This is a brief lesson. By now you should know, with the BDI dropping as it is, what's going to happen to the S&P 500? It too is going to go down. That should serve as a wake-up call. You do research on the BDI on the web, go to reputable sources, and they will all say the same thing.